Welcome back to Investors Point of View. Hello to all our community members, students, and everyone tuning in. Today, we're doing a deep dive into Bank of America's 4Q 2025 earnings report. Our mission is to, swiftly decode the key metrics, explaining them simply so you can clearly see how 2025's performance stacks up against the prior year. It really gives you the real-time health of the company.
Absolutely. And right out of the gate, the big takeaway is just momentum. CEO Brian Moynihan called 2025 a strong year of earnings, and honestly, the numbers really do back that up. When we look at the core of the business, you see year-over-year improvements pretty much across the board. It tells us BOFE has, successfully navigated the recent economic landscape.
Okay, let's unpack that with some of the big top-line numbers. For the full year 2025, BOFA's net income hit $30.5 billion. I mean, to put that in perspective, that's a substantial 19% leap from the $27.0 billion they posted in 2024.
Right, a 19% jump. And that translates directly to the shareholder's wallet. So diluted earnings per share, that's the profit for each share, it rose to $3.81 from $3.19.
And what was driving that, especially in the fourth quarter?
So Q4 revenue was up 7% to $28.4 billion. And that was fueled heavily by net interest income, or NII. That specific metric was up 10% to $15.8 billion.
NII is always the crucial one to watch for a bank, right? It's the money they earn from loans minus what they have to pay out on deposits. A 10% growth there suggests they're really benefiting from this higher interest rate environment.
Exactly. And it's not just that they're making more money, they're also managing their costs a lot better. For that, we look at the efficiency ratio.
Okay.
This ratio tells you how much the bank spends to make $1 of revenue. And their ratio improved, dropping from 63% down to 61% in Q4.
So a 2-point drop is significant.
It's huge. It signals some really disciplined cost control and lets more of that revenue fall right to the bottom line.
So let's pivot to the balance sheet itself. I mean, this growth wasn't just from, cutting corners. Average loans and leases actually grew 8% year over year. That's across every single segment, reaching $1.17 trillion.
And their deposits, which is the bedrock of any bank, they're now topping $2.01 trillion. It's a massive base.
And that health seems to reflect a really strong consumer.
It does. The consumer banking segment saw its net income rise pretty sharply, from $2.8 billion to $3.3 billion just in Q4. And this growth is strategic. BOFA added around 680,000 net new consumer checking accounts in 2025.
Wow.
Yeah, that's 28 straight quarters of successful client acquisition.
And I'm guessing the digital side of things is a huge part of that story.
100%. They had 4.3 billion digital logins in the quarter alone.
That's just a staggering number.
It is, but it's not a vanity metric. It means 69% of their total sales are now initiated digitally. That streamlines everything and supports that better efficiency ratio we were just talking about.
It all connects, and that momentum carries over into their premium segments, too.
It does. Global Wealth and Investment Management, that's GWIMSAW revenue, climbed 10%. That was mostly driven by higher asset management fees, up 13%, which reflects strong market performance for their clients.
And the total client balances
reached $4.8 trillion, up 12% year over year.
Okay, what about the investment banking and trading side? Global markets.
Also a great story. Sales and trading revenue was up 10% year over year, and this is the 15th consecutive quarter of growth in that segment.
15 quarters in a row. That's consistent execution.
It is. Equities revenue was a real standout there, rising 23%.
But with all that growth in loans and trading, you have to ask about risk, right?
Yeah.
About credit quality.
That's the crucial question. And what's interesting is that despite all this growth, their credit quality remains really robust. The bank's provision for credit losses, it actually decreased year over year. It went from $1.5 billion down to $1.3 billion in Q4.
So they're putting less money aside for potential bad loans. That's just a lot of confidence.
Exactly. Confidence that the economy won't lead to a sharp rise in defaults.
And finally, let's talk shareholder returns. They seem to be rewarding investors heavily.
They are. BOFA returned $8.4 billion to shareholders in the fourth quarter alone, through both dividends and stock buybacks. For the full year 2025, their total capital return was 41% higher than in 2024. That just shows really strong capital generation.
And looking ahead, what's the feeling from the CEO?
The CEO expressed a continued bullish view on the U.S. economy for 2026. He's projecting ongoing economic growth. So this report really shows a bank that is efficient, it's digitally integrated, and it's positioned to benefit from a stable consumer and resilient capital markets.
A truly comprehensive picture of BOFA's health moving into the new year. So here's a question for you all. Given this massive digital adoption and the continuous success in adding new checking accounts, how sustainable do you think that 19% annual growth is for BOFA? Write your opinions in the comment section below. Thanks for being here. For more financial points of view, you are more than welcome to subscribe to our channel and give it a thumbs up. See you on the next one.